Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, markets are trying to read the Huawei tea leaves for what that says about the next tariff war moves. But first, the latest dairy auction has brought an end to the 11 straight rises, today falling by 1.2%. It seems buyers can't accept the rising US dollar, so this was a relatively long auction and had relatively fewer participating bidders. The key whole milk powder price fell 2.1%. But there was a star in the show today. Cheddar cheese prices jumped 15% from the last auction, and then it is now its highest level in more than 5 years. This price is up 51% since the start of the year. Overall, prices have been down, but the lower New Zealand dollar compensates, and in our currency, prices were unchanged from the previous auction. And they're still at their highest level since 2014. In the US, industry analysts were expecting a 2.5% rise in the number of houses sold in April as their spring selling season gets underway, countering the 4.9% fall in March. But a recovery didn't materialise, with April sales down 4.4% from the same month a year ago, even though the number of houses offered for sale rose 10% from March. And Google is suspending some Android services for Huawei smartphones after the Chinese company was placed on a US trade blacklist. The move effectively bars Huawei from making phones and tablets for sale outside China. It is likely to benefit Samsung in a significant way. However, the US has later today softened its timeline, allowing a 90-day transition. In Europe, economists polled by Reuters had expected consumer sentiment there to fall in May from April, but it actually improved, and quite noticeably, bucking a downward trend that started in early 2018. But it is Europe, and we should note that the number of pessimists still outnumber the number of optimists, just by less of margin in May. In the UK, you may recall that lawmakers there have been pushing to reform the cosy position of the Big Four accounting firms and their chronic conflicts of interest with audits for life. Well, it turns out those firms have been working furiously behind the scenes, and the regulators look like they will now side with the auditors and shelve any reforms. Yesterday in Australia, there were two major policy signals from their banking mandarins. Firstly, their central bank signalled interest rates would likely be cut next month. At the same time, they are challenging both the federal and state governments to join them in doing the heavy lifting by doing some painful structural reforms. And secondly, their banking regulator, APRA, said it will loosen the serviceability requirements for home loans that banks must meet. Some industry observers think this signal might arrest the downward pressure on Australian house prices. The US Treasury 10-year yield is 2 basis points firmer today at 2.43%. Gold is down $3 this morning to $1,274 an ounce. And US oil prices are unchanged today, still at $63 a barrel, while the Brent benchmark is just on $72 a barrel. And the Kiwi dollar is lower at 65 US cents. That's its lowest level since October 2018. On the cross rates, we're at 94.5 Aussie cents, and against the euro, we're soft too at 58.3 euro cents. That pushes the TWI down to 70.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.